How does a cash flow statement work? How do cash balance and cash flow relate to each other? What is cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities? You will find all of these explained in this Finance Storyteller video. The cash flow statement is one of the three main financial statements. As the cash flow statement explains how much cash has come in and gone out during a year, and what the sources and uses of this cash flow were, you could see the cash flow statement as an explanation of how the cash balance, one of the most important assets, has developed between two balance sheets. A useful metaphor is to see the cash balance as the water level in a bathtub at a point in time. Cash flow is how much cash has come in through the taps minus what flowed out during a period. So if you check the water level in the bathtub at 9 p.m. and at 9:05 p.m., then those are two balances. If the water level has risen during those 5 minutes, you have a net cash inflow. If the water level dropped, you have a net cash outflow. Cash balance, cash flow. Keep that bathtub metaphor in mind when you think about cash balance and cash flow. Cash is king. It is critical at every stage of a company's life cycle. When you open your own business, you need cash to get started. You will need cash to grow and expand. If a company runs out of cash to pay its bills, it's game over. What you see in the cash flow statement should be a direct reflection of a company's strategy. Is the company spending enough to build its unique and sustainable competitive advantage? Are customers willing to pay for the products and services that the company supplies? Is the company able to reward its investors for the risk they have taken by paying a dividend? These and other questions can be answered by analyzing a cash flow statement. Let's work through an example of a cash flow statement, more specifically the one reported by oil and gas company Shell in its fourth quarter 2016 earnings release. A quick reminder before we go there, this video is for educational purposes. None of the comments in this video should be interpreted as investment advice. All numbers and graphs about publicly listed companies come direct from the earnings release and other disclosures by that company. Shell's cash balance at the end of 2012 was $18.6 billion. At the end of 2013, the cash balance was $9.7 billion. The cash flow during 2013 was therefore a negative $8.9 billion, as the cash balance has decreased versus the prior year end. At the end of 2014, the cash balance was $21.6 billion. The cash flow during 2014 was therefore a positive $11.9 billion, as the cash balance increased. At the end of 2015, the cash balance was $31.8 billion, due to a positive cash flow during the year of $10.2 billion. At the end of 2016, the cash balance was $19.1 billion, due to a net cash outflow during the year of $12.7 billion. It's nice to have the total numbers of the cash balance as well as the total net cash flow, but it doesn't tell us much yet about what goes on inside the company. To get a more meaningful look, we have to drill a level deeper into cash flow. That's why a cash flow statement is split into three sections. The first section will have the word operating in it, the second investing, the third financing. Many companies will call the first section cash from operating activities, or CFOA, or a variation on that wording like cash flow from operations. Cash from operating activities is roughly the cash inflow from customers paying the company, minus the cash outflow of the company paying for purchases from suppliers, minus the cash outflow of salaries paid to employees, and minus the cash outflow of taxes paid to governments. For most mature companies in good health, the cash flow from operating activities is a net cash inflow. The second section is often called cash from investing activities, or a variation on that wording. This is where capital expenditures, a cash outflow, acquisitions, a cash outflow, and divestments, a cash inflow, are recorded. Cash from investing activities tends to be a net cash outflow for most companies in most years. The third section is often called cash from financing activities, or a variation on that wording. This one can go either way, a net cash inflow or a net cash outflow. Does the company need money and attract new debt to finance itself? Then there will be a cash inflow. Does the company have a lot of cash on its balance sheet and no plans to put that cash to any productive use? Then the company might be paying a dividend to shareholders, which is a cash outflow. So let's look at these three categories: operating, investing and financing for Shell. Shell has provided a long-term overview of 2010 through 2014 to show how the various types of cash flow are related. Shell generated a very substantial cash flow from operating activities of up to 45 billion in 2014. What does Shell subsequently do with this cash inflow? It pays out dividends to shareholders and buys back shares, up to 13 billion in 2014 in total, and has very large capex or capital expenditures with a peak of 40 billion in 2013. By keeping a healthy balance between cash inflow from operating activities and the cash outflows from financing activities, dividends and investing activities, capex, Shell at the same time was able to keep its balance sheet healthy. However, times have changed dramatically in the oil industry. In Shell's case, every change of $10 in the oil price impacts cash flow by around 3 to 3.5 billion. And as you can see in this graph, the oil price has dropped significantly from an average of $100 per barrel in 2014. If you are interested in a more in-depth look at the similarities between two very capital-intensive industries, please check the blog article on my website, which I will link to below in the description of the video. So how did Shell do on cash balance and cash flow in the most recent financial year it has reported on? Shell started 2016 with $31.8 billion cash and ended with $19.1 billion. The net cash outflow during the year was $12.7 billion, as the amount in uses of cash, on the right of the graph, exceeded the amount in sources of cash, on the left. The continued low oil price has led to the lowest cash inflow from operations in many years. The capex cash outflow is also much lower than before, so that partially offsets it. An unusual item in 2016 was the large acquisition of BG Group, or British Gas, which changes the business portfolio and strategic direction of Shell. Here is that very same overview in numbers. The cash opening balance of 31.8 is at the top and the closing balance of 19.1 at the bottom. The numbers in the middle are the cash flow line items. Cash outflows are shown as negative, between round brackets or parentheses. This table is from Shell's earnings release presentation. There is more detail in the supplemental financial disclosures published on the same day. On the cash flow statement, the first section is cash flow from operating activities, the middle section cash flow from investing activities, and the bottom section cash flow from financing activities. Understanding cash flow is a key element of getting the picture of a company. As an investor, analyst, employee or supplier, it is advisable to understand both the actual numbers of past years as well as the intent going forward. At Shell, corporate strategy and the cash flow statement are highly interlinked. Shell's cash priorities are debt reduction, dividends, share buybacks and capital investment. The drivers to deliver on those priorities are divestments, reducing capital investment, reducing operating costs and delivering new projects. If we zoom in on the second lever of these four, capital investment, Shell shows us this picture. After the significant capex reduction in recent years, Shell intends to stabilize the annual capex in the $25 to $30 billion range. More detail on the specifics of Shell's projects under construction are available in the Q4 earnings release of Shell. I hope this cash flow statement explanation and cash flow statement example were useful. On the Finance Storyteller YouTube channel, you can find lots of well-researched videos explaining business, finance and accounting topics. Please subscribe to the Finance Storyteller channel and take the time to like the video and comment below. On average, I post one new video per week. If you subscribe to the channel, you will be the first to see it.